Kristen King, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. This week, we're looking at a big player in the sportswear retailing sector. Sales of sportswear in the U.S. topped $167 billion in 2018, so it's not just a sizable industry, but also a fiercely competitive marketplace. The stock that we're covering today is Foot Locker. The business can trace its roots back to an even more venerable name, that of F.W. Woolworth, which reinvented itself as Foot Locker back in 1997. Even today, Foot Locker operates out of locations that were once Woolworth stores. As the name suggests, Foot Locker's main business is selling shoes with an emphasis on sneakers and leisure wear. The company operates from 3,000 stores in 27 countries around the globe and also through websites and mobile apps. Group sales in 2019 were $8 billion, and the business achieved sales per square foot of retail space of $510 and earnings per share of $4.93. In common with other bricks-and-mortar retailers, Foot Locker has had a tough time in 2020 thanks to COVID-19 and the partial closure of the economy. However, in its Q3 2020 results that were published in late November, the business reported same-store sales that rose by 7.7% and third-quarter net income of $265 million, or $2.52 per share. The income figures were boosted by a one-off revaluation of some of the company's minority assets. However, at a trading level, the business grew strongly. Total sales in Q3 2020 reached $2.1 billion compared to Q3 2019 sales of just $1.9 billion. The company was also adding stores and opened 27 new locations and relocated 8 others in Q3, though it did close 95 underperforming locations, including 70 Runners Point stores. Buoyant current trading is not the only reason that Foot Locker has caught our attention, and there's been some very interesting insider buying and some unusual corporate actions as well. Vesa Equity Investment, a Czech investment vehicle backed by 2 of the country's leading entrepreneurs, has been buying Foot Locker stock over the last week. The Luxembourg-based fund has purchased 1,491,269 shares with an average price of $38.04 for a consideration of just under $57 million. Vesa Equity had previously taken a 6% stake in Foot Locker back in May this year, alongside a number of other equity investments in Europe and the USA. The recent purchases may just be opportunistic rather than an aggressive prelude to a bid. However, events at Foot Locker suggest that the management has concerns about a possible predator on the prowl. The firm has taken the unusual step of instigating a short-term shareholders' rights plan, which provides each shareholder with an entitlement of 1 right per share. These rights are designed to ensure that all shareholders would benefit equally if someone should mount an outright bid for the business or try to come through the back door by amassing a controlling interest in the company's shares. Vesa Equity was previously granted permission to acquire up to 50% of Foot Locker's common stock under the dispensations available under the Hart-Scott-Rodino Act. Foot Locker stock is up close to 13% over the last month and is closing in on its year-to-date high of $42. Vesa Equity may turn out to be no more than a long-term investor in Foot Locker, but then again, they could be a corporate raider or a stalking horse for others. Certainly, it's a situation that warrants our attention from here. That's all we have time for this week. Of course, these remain uncertain times, so please remember to always do your own due diligence before making any investment decisions.